Hey, good morning, guys. My pre-market morning brief video. Things going on here this morning. Things seem to be looking a little bit less bad in the broader sense this morning. We started the week out in a really good way with some range expansion to start open our week real quick here. Some things I'm looking at here. So we did start our week breaking out of this diamond bottom formation. Okay, so now we have to start thinking where could we reject? We did see a little bit of profit taking into the last 2 hours of yesterday's trading activity, and we're pretty well flat, as you can see on the futures. We're flat right here so far. Uh, so we have to keep an eye here. See, that might be all we get, but in my opinion, things we got going on here. So what I have is my market maker moves uh, uh, for TheoTrade. They gave this out free to people, and it's not a perfect study with Thinkorswim, but it can give you an idea. The white little dashes there, that represents weekly closes. And if you really want to try something right here, what you can do is put a little rectangle right here. Okay, and generally that looks like a pretty good rectangle right there. You know, and what you can tell is this is a consolidation zone right here. So basically we came up and on this time right here, this became new resistance on this weekly time frame. We're down here even a lower base now and we're breaking out. So in all likelihood, we're probably going to be coming back up to these highs off of this last consolidation area. Okay. And this was kind of a diamond itself. Okay. A diamond breakout, a low area breakout, which we rally off of. We're doing a similar situation right now off of even a lower base. There's no reason to think that we're going any higher whatsoever in this market, but we do have a potential breakout scenario going into Google and Microsoft earnings tonight. Then we have Apple and Amazon Thursday. So, be mindful of where we are in earnings season and what we could possibly be doing here. Okay, let me change the color of that so you can see it better. Okay, which one do I want to use? I don't know, maybe that one would be a good one. So yeah, that shows it up better. Okay, and see all these white lines right there. So that could be a gravity point. Another way of doing this, well, where are we probably going here? Okay, let me see if I can get this to go show up here. We do a fib extension right here of our diamond pattern. Okay, so we go up to our diamond high, and then we anchor it right here on the breakout right now. And what would get us back into these weekly closes? That's between the 50% and the 61.8 of which would be a normal which be a typical breakout scenario using our fib extensions on this chart. So that so a lot of things suggesting here that we might be breaking out higher into these prior low highs. So just be mindful of that scenario. MACD is supporting that thesis as well. Okay, 1 second. So some takeaways today. So basically things are looking pretty bullish here on our MACDs and our clouds. So I got two clouds on here. This is your traditional Ichimoku with your standard defaults from Ichimoku, and this is my momentum Ichimoku. So we are going into a very critical earnings reports this evening. So my main thesis here, we could just go sideways here and not do anything at all, but we do have the 50 SMA right above us. So I'm thinking the 3840 area, 3850 area is quite likely today. And we do have on our momentum all the way up to 3873 potential today. Okay. Now, on that prior chart I told you, the 50% retracement was 3880. Okay. So that's really close here. That's right into our momentum high on our cloud. That was our 50% retracement with a 3910 to 61.8 area. Okay. So if you go up to the 3910, uh, you know, uh, I just don't know if we're going to have that much bullishness today. That gets us back into this high range breakdown right here, the 3923 area. We might have to wait until after the numbers actually come out. So, if we're going to continue to the upside in this market. So, like I said, we did have a little bit of some sell side profit taking, or a little bit of worry in the broader in the markets the last 2 hours into yesterday's close. So be mindful of that. But it does look like to me that we have some more upside. So we have to be mindful of that scenario. And like I said, we have a day one breakout, it does seem to me, on the current pattern we got going on today. So we'll see if we can get some follow through in this trading pattern. Okay, so that's some things that I'm really looking at this morning. Other than that, well, like I said, we got those big earnings coming out, and we could have a very tight day, tight inside day. I just don't know if we're going to get a whole lot of downside. Uh, knowing that we've just started a potential breakout of like I said, the diamond pattern. You know, uh, it it does make sense to me that we're probably going to see additional follow through today. Okay, another thing we got to be mindful in today's trading session, we did have Yellon coming out after hours yesterday, suggesting going into the winter that the State Department, that's what she's in charge of, they are going to be looking to adding liquidity to the long end of the bond curve. In that scenario, uh, that they're trying to support the bonds. That's kind of what I got from the ad, from the news conference after hours yesterday. So we might actually start seeing a decline in some of these the 10-year, 20-year long end of the curve, some of these yields. So be mindful of that. That actually you know goes hand in hand with quantitative easing that the Fed that goes back into, if you go and look at your probabilities on the CBOE. One second here, let me show you. So this is a very useful tool. The CBOE puts it out. It's a free resource. And as we are seeing here, we're starting to see a little bit of paring back here, ever so slightly so we all pretty well are expecting a 75 basis point hike here in November. It's pretty much been said and everything like that. But just being able to see that, just starting to see a little bit of paring back in that probability, that suggests that the bonds could actually start seeing a little bit of a bid, kind of a relief rally in the bond market. And we are seeing that scenario the past yesterday and possibly today. So be mindful. That was the big news, in my opinion, overnight. That whole Yellon news. So be mindful of that. Another big problem child for the global markets is HSBC. They came out and they did manage to beat on their earnings. So, that is a relief to the global markets. It's a European bank, has a lot of international exposure. So they did manage to beat on their earnings. So that was good. We had Adidas come out just a few minutes ago with their actual earnings out of Europe. They had already pre-announced, to really took a big hit on Adidas and Nike on that pre-announcement, and now they're down almost 3.5% this morning. Initially this morning, even though having a really bad pre-announcement reaction, so you do have that weighing on the apparel. So I would think the whole apparel section of trading today would probably be under pressure. Shoes and apparel. Be mindful of that on the consumer discretionary front in today's trading session. Another thing I'm looking at here, we're going into those big earnings this week. There are three resistance areas here and a downtrend here on my VX futures, and we have rejected all four of these levels, and we are into I call this the house of pain. Using your fib arcs. This is where you actually get stronger, directional moves. It does look like we're trying to resolve down to these lower levels. in my opinion, here, the 28, 26 area here on volatility. So let's be mindful of that. We're right down here into a support area. It looks like it could be on the verge of breaking. So be mindful of this scenario that the VX futures could be breaking some critical supports. We're right here. See where the MA's cross. We're trading right there right now, at a very critical inflection point here for our VX futures. So be mindful that there could be something developing here on our volatility that you know uh, they're either going to come in here, sell the markets down and create this as new critical support, or we could be breaking down on the volatility here in the next day or two. So be mindful of that scenario. Another thing I really want to talk about, this represents the FFTY. This represents your growth areas of the market. Okay, your growth stocks. Okay. Yesterday we had that relief rally, but a lot of it dealt with consumer staples. Okay. Or healthcare. Okay, that's what really drove the breakout yesterday. But we do have, in my opinion, a potential change of trend here. It looks like our ribbon could be as early as today or tomorrow morning, crossing bullish, potentially crossing bullish, giving us a green ribbon uh, here on our growth stocks. We do have a breakdown pattern here, which we could be potentially coming up here and testing a range high here on growth. So let's definitely be mindful of that. Of course, we know things are pretty bad here in the global markets. I have said multiple times, I think anything over 3,600 is on the ESs is still overvalued in the grander, longer term scheme. But that doesn't mean the markets can't go higher in the short term on this earnings season, and then later on into second quarter next year, finally break back down into the longer term trends. So be mindful of that. We just may not be ready to be doing the proper correction, which I'm still looking for. So we have to be quite mindful of that scenario. Okay. Some other things we're looking at here. We're still hanging out down here at critical support here on the dollar. So we in the overnight session, we did try to put in some lower lows. We currently are trying to hold this level, so definitely keep this on watch here. Dollar does look like it could be losing some steam here, which would be bullish for the possible growth side of the markets. So we definitely got to keep this very important. They have been inversely correlated for some time now. And finally, we have to really be mindful of the USD JPY correlation. This has been really supportive of a stronger dollar uh, going forward here. And we do have the Bank of Japan doing some announcements this week. And we have to be mindful that this is going to be a hot button in the markets. And we are trading below a primary trend line, testing a critical support here on basically the 10 SMA 8, the 10 SMA, potentially giving us maybe a corrective phase here with the USD JPY. This correlation has really gotten considerably. I think we're like 30-year lows on this correlation. So be mindful here. This is a area of the market that definitely could see a massive correction back to a more mean scenario. So, and that would also, in my opinion, probably be a little more bullish broader equities if that were to happen. Leading to a weaker dollar, and be a little bit more supportive of risk on in the broader markets. Okay, so that's all I got to say. It's 15 minutes, so I don't want to talk too much. Uh, I'm a perma bear, but uh, I the way I trade, I'm in just for minutes or hours in a day trade. I'm a day trader, and I go in big, in and out in just a short time frame. And so bottom line is, as long as I have volatility, I'm happy with my trades. My big warning today is that volatility might be collapsing. So so that is the biggest warning sign for myself as a day trader that I have. So I have to look going forward into today's trading session that I could easily get walloped as IV is being crushed if we start seeing a breakdown of volatility. So as if all you people who are day traders, be mindful of that scenario, and definitely could lend itself to buy yourself more time in your trades than you typically otherwise would. So be mindful of that. Thanks a lot for listening. Please like my video, follow me on Gummy9662C on Twitter, and leave comments below if you're seeing something I'm not seeing.